What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, the people's champ of Wall Street, the bearded boy wonder, Dave Bartosiak. And today, my friends, oh, it's a glorious, glorious day. Not weather-wise, though, because it's a little rainy here in South Florida. But I'm just happy to be back here with Live Trader. After, traveling and then having to hightail it for a little family situation last week. So I'm just glad to get back to work here. And we've got earnings season kicking off pretty much this week. Next week is really when it heats up. So there's all sorts of names, and this is really one of the most anticipated earnings seasons, I think, in the last several years. Because not only are you getting a ton of earnings estimate revisions and upgrades on the heels of the historic tax cut, but I'm really going to be keyed into guidance moving forward, because I think we're going to get some bullish guidance out of a lot of companies as they finally comment on the impact of the tax cuts in their particular industry for their particular company. So we're going to get at least some speculative insights in that regard. And then over the next few quarters, we'll get some more details. We'll actually have results as to, who really put their money where their mouth was and responded. So Trevor, hey, how you doing? Jim, it's going all right. Ron, what's up, my friend? So let's go ahead and just get into this here with regards to Delta Airlines. And we're going to kick it off, as always, taking a look at the price consensus and EPS surprise chart here on Zax.com. Black line corresponds to the right y-axis, which is price. The little green arrows are earnings beats. Red arrows, well, there's only one of those. No, two of those, rather. Those are earnings misses. The multicolored lines represent the evolution of our Zax consensus estimates over time. These correspond to the left y-axis. So a couple of things to point out here. First, some decent growth into 2014 and 2015, slowing in 2016. All those numbers moving to the negative. And I'm a little afraid that even though you did have this blip to the upside here into 2017, still kind of rolled over again. So, earnings trends take a very long time to reverse. And I don't know. I mean, I see this sort of trough here into this first quarter of 2017. Things do obviously start to turn around, but I don't like the double dip. So if you look at it, things turned around into a miss, and then we got a double sort of dip here. Yeah, Jim, playing a little blues in the background. It's kind of far away, that speaker, but every once in a while I feel a little wind. It's raining down here, so it's all right to play a little bluesy music. So again, a little bit of negativity here. So I don't really like that. I don't like seeing that. And I also don't like seeing 2017 estimates starting all the way up here close to $7 and finishing at $5. That's quite a bit of backpedaling there for EPS on the stock. So not something I like to see a lot of. And then the growth year over year, there's not much. At least there is growth in there. And we're going to quantify this taking a look at the detailed estimates page over on Zax.com. They're going to report before the bell on Thursday, so you got the rest of the trading day today and tomorrow to decide if it's something you want to mess around with. So the Atlanta airport shutdown could have an effect in the short term, but it doesn't, they kind of account for things like that because it's going to happen, right? These airports get shut down, especially in the wintertime. That happens pretty much every year. You're going to have shutdowns. So I think when they're looking at these numbers, a penny here, a penny there, doesn't really make or break their case. I think it's more about, looking out at the guidance in the next few quarters. Now, one thing, the earnings ESP here is negative. Not much. That just means that recently somebody's ticked down their number, trading at about 10 times earnings. We're going to dip into the EPS in more detail when we go in the next section, but top 27% of our Zacks industry rank. So overall, the airlines are doing all right. Let's look at the sales numbers. 7.4% growth here for the current quarter. Next quarter looks like 735. Next year looks like 539. So slowing a bit, looks like. Now look at this on the EPS. Now I was reading a research report out of, I think it was Ray J, and they said that there's some accounting changes that are happening over there. Something that they used to count in other revenue is now going to be counted in passenger revenue. And then there's another little tweak to basically going from their labor costs into like a pension kind of thing. So without getting into the gory accounting details, there's a little bit of numbers switching, moving around happening. So one thing that Ray J did is they were dropping their front year estimate, or their current quarter estimate, I think, and then increasing the current year and next year. So a little sleight of hand. Anyway, current, look at what am I doing to this thing over here? Current quarter, 9 point, that's not even the level. Where's my level? Is that my level? Or is this my level? I can never remember what level I do. That looks too fat. Maybe that's just right. So current quarter, 9.76%. Next quarter looks like 9.09% EPS growth. Current year, contraction for the current year, actually. And this is ending this quarter, so this is the number that we're going to get. And negative 8% there. But all eyes on next year. Next year, looking like 11.9% EPS growth. So could be good. If you look at what's happened recently here, over the last 30 days, 8 analysts have come out and dropped their numbers for the current quarter. Next quarter, 2 to the downside. Current year, 8 to the downside. Next year, 4 to the downside. But that was countered with next quarter numbers being increased over the last 30 days. 3 analysts coming out and doing it. And then you got 5 doing so for the next year. So a couple of moves being made there in the positive direction to help offset some of the negativity. But overall, I'd say there's an overall kind of little bit of a negative bias here. Look at the overall effect of the Zacks consensus estimate, and you can see it played out here from 108 all the way down to 90 cents for the current quarter. Next quarter is stuck at 84, but the current year number's gone from 503 to 489. Next year, though, next year looks better. So really the decision that we have to make is, are investors going to give Delta a pass on this current quarter, closing out this current year? Is it enough to look towards next year and think, yeah, things will be really good for the airlines? Now remember, one of those main costs, the fuel costs, have been going up. They have been on the rise, so that could be a little bit of a headwind here for Delta in the intermediate term. All right, let's go to look at the numbers in a little bit more detail. I don't think we need to compare Delta to the Boston Beer Company. Obviously, that's something that we had up for Constellation Brands, which we were doing previously. Let's look at the sub-industry. So this will be your Zacks industry, kind of like you have the Zacks industry rank. This is the rest of the crew over there. So these are revenue numbers, and you'll note, historically, pretty good revenue growth, but that has slowed a bit. 2016, there was a contraction. Only looking for 3.83 this year, but next year it's supposed to get better. Supposed to get all the way back up to 539, and then 2019 is going to slow again. So next year is going to be good, and you're still going to get a little bit of revenue growth here. So as you look at the next year number position, it should be okay in terms of the revenue side of the equation. Now, how does that translate on over to the EPS side? Yeah, Jim, It's going to be tough to get a pass on a bad number, for sure. And people are definitely going to be looking for the growth. So high beta, high growth is going to get rewarded. And if you were in a higher beta, higher growth industry, and all of a sudden you stumble, you're going to have big time trouble. And this is just surprising to me that there was actually EPS contraction during a year, which was overall pretty good. But again, it's all about next year. So next year looking like 11.9% growth for next year. So it just depends on how close they come to this 90 and how enthusiastic people get. Now, this is also early on in earnings season, so I fear that later into earnings season, that bar is just going to go higher as we go along. What I mean by that is I think if we're getting companies coming in beating and giving good guidance, you're going to need to give really good guidance and really beat in order to get rewarded in the market. But then again, that's a problem we're going to have to see over the course of the next few weeks if that develops. Just kind of keep an eye on things. And that's one thing I've noticed through doing these through the years is that the earnings season starts one way, but it evolves, and the types of companies that get rewarded changes over the course of the next few weeks based on what's been happening. So early on, it's important to keep an eye on things, see what the initial sort of pulse of the market is. So overall EPS, it's looking good in the future. Let's look at this from a valuation perspective. First, looking at forward earnings here, and we're going to leave this sub industry up so we can compare it to the rest of the business over there. If you look at going back to, you can basically ignore it. Let's not even pay attention to 08, 09. I mean, we're dinosaurs. We don't even need a total different world, different planet, different market cycle. But if you just look at the last few years, where these PEs have gone, you can use the median PE as decent, or I just like to look high and low. Just give you an idea of the range. And you'll see that range really whipped around in 2016. And then started and contracted into 2017. So basically they were 8 to 10 times earnings for the most part. Of course, it's early in the year now, trading at about 10 times earnings here. So I think, a decent sort of rule of thumb here for the airlines is 10 has been here for Delta in recent years, kind of where you can expect it, to trade. And that note is a little bit less than the industry average of 12 times forward earnings. So cheap relative to the industry on a PE standpoint, but how does that translate to sales? In case you were wondering, pretty much on par with the rest of the business, 0.89 times sales, where the industry is at 0.9, so spot on. So just about, close to one, close to their sales is basically where they end up going. So that's why I was saying when I was looking at this EPS and this little bit of accounting that's going to take place on the EPS side of things, and maybe don't worry so much about a penny here or a penny there. This is case in point. It's really all about revenues when it comes to these airline stocks. Now let's look at the detailed estimates page and see if that gives us, or I'm sorry, the consolidated surprise page. And let's not worry so much about the earnings surprise side of the business. Rather, let's look at the sales surprise side of the business and see if we can find some sort of correlation. So you see the surprise numbers really in line, just 21 bips to the upside, 39 to the downside, 9 to the downside. Just little sort of moves, not huge breaks to the upside or the downside or whatever, but it hasn't mattered. These stocks have been very stagnant and just kind of moving sideways. And if you look at Delta stock for the last few years, it's going to echo that. So don't expect too much out of a Delta earnings report is what this is saying. At least not the immediate reaction. So again, this is 2 days before to 2 days after, right? Now let's take a look at the chart and see if we can glean any other information from this. And again, Chop City is what we can glean. So overall, now we do have a slight, there's, and I could zoom out here, and I'm sure this channel would look prettier, but there is a slight sort of upward motion to this channel, but really it's a range bound sort of stock, and we've seen it where it really likes to huddle itself down at the $50 level. So if I was trading this purely from a technical perspective, I'd be looking at, well, first I would draw a better channel, but after drawing that, I'd be looking for this sort of upward kind of trend channel and trying to play it within the channel. So as it came down to the bottom end of the range, I'd be buying it. As it got to the top end of the range, I'd be selling it. One thing, you can use these oscillators in order to tell you when to do so. So when something like the commodity channel index gets up above 100, start looking to fade that move as it spikes higher. So here you get the spike, kind of runs out of juice, and then comes back down. Same things happen here, runs out of juice, starting to creep back down. Now notice how it fights above, gets to highs, and then just kind of lacks the momentum to follow through those highs. So, you know, I think this is one of those where you keep a price alert on Delta. If it gets down to 50, you should be pulling the trigger on it, especially if you're expecting 11% growth in the next year, because that's something that will definitely push it higher. But I would bet that over the course of the next few months, you do see Delta somewhere near 50, just because that's its MO, right? Even as the market's marching higher, the large caps are doing their thing. Delta still finds a way to kind of meander through. And the other part of this that I was touched on real briefly was oil prices. So I'm gonna pull up oil really quickly, and so this is kind of a major pressure here as these input costs are starting to creep up. Now, we could do a whole analysis on where we think oil's going to go, but I draw these fibs, you know, years ago, and then they ended up coming into play. So notice that behavior sort of around this 38.2% extension. Market starts to creep back up. Wouldn't be surprised if it comes back down to test. And then you got the 50% extension all the way up over here over 66. So oil's definitely on the move right now. I also saw something that I think the Iran oil minister doesn't want to see Brent crude in the 60s, something like that is what he was saying. So of course our light sweet crude a little bit different here, but we'll go from there. All right. So let's get back to the Delta. Yeah, Mr. Wallace here. While you got me on the line, let's do that real quick. Let's just look back at these valuation metrics real quick. Let's do the sales, because that's what we were saying was basically spot on. Oh, sorry. Let me put Delta here. And then we're going to enter the ticker here. This one we're going to do LUV. So LUV is a lot richer. That's Southwest Airlines. A lot richer in terms of valuation of price to sales than Delta is. And then so if you're trying to figure out why, what you then do is you take a look at Delta's numbers versus Southwest's numbers, and if you see the revenue growth on Southwest isn't that spectacular. So they're looking for 3.4, 6.7, and 2.7, while Delta's at 3.8, 5.3, and 0.79. So maybe a little further out it gets better, but I don't know, that's a little rich there. So still undervalued, I suppose you could say. The Delta is relative to Southwest Airlines. All right. Let's start digging over here. Good news is they're going to bless us with a front week contract, so we can get, what is this, 54.40s? Let's do 54.50s. Get an idea of where this stock might want to go immediately following the report. So the 54.50 call, basically 74 cents. The 54.50 put, 95 cents. That's 169 on 54.50, or 3.1% is what they're expecting here from Delta on their earnings report. Now, we've seen that the last time 3% happened was never. I don't want to say never, but let's pull this up here. We just had it. I want to try and look. Not. Oops, sorry, guys. Wrong. Okay. There we go. Nope, I screwed that up too. Unbelievable, guys. The stuff that's happening here. Let me get this right. This consolidated surprise. That's what it's called. Okay, great. When's the last time we got more than 3%? There's a 2.7. I mean, that's a little bit. You have to go all the way back to March of 2015 in order to see a move more than 3%. That was a 443. March 2015. So it's been a while. It's been a while. All right. Let's see. Now, if you look at the monthly expiration, I like to pull this up sometimes and just kind of eyeball where the players are. So there's a lot of activity at 52.50, also 55, and then all the way out at 57.50. So that's kind of jumping out at me there. Let's see what's happening on the put side. Put side, you simply don't have as much activity going on. The 55s, almost 15,000 contracts. Go all the way down to 50, you got 6,000 contracts, but really just kind of trickling in. Does not pack the punch as that front month contract in terms of open interest. Okay. So really, if you're looking to get bullish here, a decent report would obviously take them back near the highs. So 56.50s, basically. Now, here's the other thing. They're drift patterns, right? So while that first day, typically, first day or two, doesn't really yield much of a move out of Delta, they do have a tendency to trend a little bit, okay? So I think the way to play this, regardless, is maybe you just want to sit back, let the earnings report happen, because you know they're not going to do anything, right? Because it's so rare that they do anything, and then go ahead and get on board later, okay? That's obviously a safer way to play it, and it's always a safer way to play it. But here we kind of have empirical evidence that it is, in fact, a very safe way to play it. Because they just don't move. But, again, you get the drift. So they don't move immediately, but you get the drift. So, you could just wait. You can just sit on it. Not a big deal. But that's not what I'm here for. I'm officially going to give you a couple ideas. Let's go back to my so 50. What did I say? 56 and a half. Of course, looks like. Oh no, they didn't die. Okay. Where's the 50-day? The 50 days at 52.64. Okay. Now with these levels in mind, let's see what we got going on here. Said what? 52.64. Okay. So let's look at this. Scenario 1 on the bearish side of things. See, the market kind of tests that 52.50 level. So test the 50-day moving average. And I don't even necessarily need to go down that far. I could probably do 53s. Well, let's say 52.50. So here's one for the bears. Bears, Bears do 54.50 put. Going to cost you 117. Cost you 117. Simultaneously selling the 52.50 put, you're going to get back 43 of those cents for 74 cents at risk. Difference in strike prices is $2 minus the 74. Means you can make 126 on 74 or 170%. What you would need is shares of Delta to close at or below 52.50 at expiration in about a week. Bear debit long Jan 19th. 54.50, 52.50 put spread for 74-cent net debit for the Bears out there. Bulls, I think that 56.50 is sort of the top, as you've seen. And again, the same anchor with that 54.50. So how does this look for you? Going long, the 54.50 is going to cost you 98 cents. Simultaneously shorting the 56.50, you're going to get back 31 of those for 67 cents, being your net outlay. Difference in the strike price is $2 minus that 67 cents. It's $1.33 on 67 or a triple up. So the bull debit long Jan 19th, 56.50. Woo, 54.50. 56.50 call spread, okay? For 67-cent net debit. Now, Trevor's got the good question. Well, wouldn't the IC, the Iron Condor, make sense if it doesn't move? Absolutely. Now let's look at one of these condors. Now here's the thing. Specifically on the Condor, how much are we going to make on this? A $54 stock. $54 stock. And even if we do, let's say you did look at this. What if we did something like this? Okay, that's the first time I've drawn that. This is the double. This is the U. It's like this looks like an animal, like a balloon animal that I've mangled. Anyway, so we're gonna do this, and then I'm gonna show a 54.53. Okay. And look at the math on this. So 55, you're going to get 49 cents. Buying the 56 put is going to cost you 22. So it's 27 cents on one side of it. And then 83 minus 43 on the other side. So 40 and 27. So you can make 67 cents here. Most you can lose is $1. Right? So 67 cents is what you can pocket, and then there's an additional 33 cents of risk there. Okay? So that's a pretty good bang for your buck if you want to go that route. Okay? The thing is, Trevor, they have a tendency to not move, right? And everybody knows that. So your Condor has to be so close in order to get like a good bang for your buck, or in order to get a good return on it, right? So that was the example of it being absurdly close. But think about what we typically do on our Condors. We go out as far as the market appears to be pricing in. I'm going to do that U thing again. We go out as far as the market appears to be pricing in. So the market was pricing in like $1.50. So that would mean we'd have to go all the way out to here. So we'd have to do a 53.52 and then a 56.57. So one, it's just very tight, right? It's just a very tight move. And I don't feel like the Condors work great, I think, when the market's expecting a little bit more of a move, because then you can get out a little bit safer. So constructing it and only looking at what your reward is and risk to reward is one thing, but you got to think about the probability of success, because that also has an influence on it too. And the further out these condors are, the higher your probability of success is going to be also. So with this one, if you went out a little bit more than what the market is pricing in, I still think if Delta makes an okay move, like this is easy to hit, right? If for some reason they really like the guidance, like it's going to blow through the top end, like no question. I just don't, I don't think we're getting rewarded enough, right? So yeah, so Jim, so the STZ is working because of why? Look at the STZ stock over the course of the last several years, or not even several years, just months. It's a stock that went from 150 all the way to 220, 230, right? So there was a lot of sort of implied volatility that was priced into those options ahead of the report. Whereas with Delta, it's been chopping around just within this tight range, so you don't have that sort of expected move priced in, so then you're not selling that to people, so you're not getting compensated for it, which is why I'm shying away from the Condor in this specific instance. Does that make sense, guys? I know that was probably not the simplest of explanations, but when there's juice in that Condor, that's when you want to juice it, right? You don't want to try and squeeze water from stone. And just with Delta, that's also why I wasn't even looking at regular credit spreads. So, you know, my instinct is you go, okay, well, 56.50 is sort of the high, so let's sell out of the money, you know, call spreads here. And here it was just like, nah, you know, I don't know about that, right? So yes, so Aaron, this does lend itself to lottos here, okay? It does lend itself because these are so cheap. So since the market is pricing in virtually nothing, if something should happen, you're going to end up being handsomely rewarded, okay? So upside lotto is basically the top end of this range, right? Upside lotto is they have a huge report and they break out above, you know, 57. So I think that's where you got to look. Let's go back to the stacked. Breakout up above 57, 56, 57s. It's only going to cost you 20 cents for the 57. It's only going to cost you 31 cents for the 56.50. I think that's where your lotto lies, is long the 56.50 call. Let's just talk about that. We'll just say a lotto long Jan 19th 56.50 call for 31 cents. Oops, not 65.50. Jeez. Can I even fix this? Let me fix this. There we go. Long Jan 19th 56.50 call for 30 cents or 31 cents, whatever it is. I think that's. And then on the flip side, there's also a bearish lotto, and the bearish lotto is that it breaks that 50-day moving average, 52.50s, 52s, so somewhere down here. So you can get one of those also, okay? I'm gonna say that I know this is a first, right? This is a first, gents. Are you ready for this? Trade that pays. Are you ready for it? Coming on Thursday morning. Coming on Thursday. That's right, guys. I think you should take a pass. Unless you're doing a lotto or something like that, right? But I think that this, we've seen that it doesn't move that much following the earnings report. And it's actually setting us up perfectly so that we just wait, see what the initial reaction is in the market, and then make our move then. I think that makes the most sense, specifically for Delta. Obviously, you know, I've never actually done this and told you guys, and not even giving you a trade that pays and said just wait till later, right? But just sit on this one, because this one is setting itself up, I think, to allow us to buy the day of, okay? And no, I'm not going to get used to doing this to you guys, okay? But the more I think about what we're doing here, the more I think it benefits us to find times where we look at it and go, you know what? The stars aren't aligning on this one to roll the dice, and we should just wait until the day of, because Delta never moves, and then we can go in a direction. So I think that's what the plan should be, right? So there you go. So what's the schedule? So tomorrow we're doing one, and then Friday we're doing one. So Thursday morning we'll just have to hang out in the chat and see what we're doing. So let me put that chat here so that everybody has it. I should have this just on, like, ready to go at all times. I wish I could pause this little marquee that's going across the bottom of the screen too. I guess that would be nice. There you go, Jim. Jan 1555 put. That's the kind of thing, roll the dice every once in a while. TTPS. There we go. Discord.gg/PBigBWCMSG. Stands for nothing. All right. So come get us in the Discord chat if you're not already there with us. Know we've got a lot of new eyes checking these out recently, as the subs have gone up a little bit. Yeah, we got some flexibility here, so let's do it that way, all right? And that's it. So, guys, thank you so much for the well wishes about my pops. Everything is going all right. So we're good there, and that's all I got. So I will see you all in the chat, and then also mañana for whoever the heck we're doing tomorrow. I can't even remember. Lennar? Are we doing Lennar tomorrow? Or are we doing JP Morgan? I think we're doing JP Morgan tomorrow. And we'll go from there. And I did get asked about Lennar, or KB Homes, was it? Lennar. We were going to do Lennar. That's right. We were going to do Lennar last week. I couldn't do it. I didn't even get around to doing any of the research for it, so I would be an absolutely useless resource for you right now, unfortunately. I will try and take a look and see if I can formulate some sort of hypothesis. I just got I got to run off and do some other Zaxxy stuff right now. So, again, guys, yeah, Jim, like I said, I don't have anything right now, but I would wait like for Lennar's and then just trade KBH, I think, right? Because I don't know that they're reporting on the same day. I think you got one and then the other. So home builders should be good, though. Overall, home builders should be good in this market. All right, but I don't have any detailed analysis for you right now because I didn't even dig into it. So sorry about that. All right, well, that's all I got for you here today on Zach's Live Trader. Thank you so much for hanging out, and I will see you all mañana. Have a good one.